The PBOC, what are you expecting there? Because no doubt the Chinese currency is a constraint, that widening yield differential. But no doubt the data continues to build the case for more easing. And the thinking here is that monetary policy is likely to be implemented while they sort of tie themselves over this sort of policy vacuum over the next couple of months before the NPC. Would that be an appropriate way to look at things?
Yeah, most likely that will be the scenario that is going to play out. The PBOC will likely cut, and the Fed has been easing, and Fed will likely ease a bit more. So that will create some room for PBOC to follow up. But I think more importantly is, China will have to use a lot more in terms of fiscal easing. Monetary policy, I think the points that you made are absolutely correct. They create this kind of constraint on the PBOC, how much they can cut. But on the other hand, we expect the Chinese government, they will have to use the central government balance sheet to support aggregate demands. That's our main expectation. The fiscal easing will play a much more important role in driving the Chinese economy next year.
Okay, but if the Fed slows down on bringing down rates, Yan, what do you think would be the ripple effects for this part of the world? We also had Professor Jeremy Siegel from the Wharton School of Business tell us that maybe tariffs would not be as significant as anticipated. So how do you put all of that together in terms of what that would mean for China's export potential and export growth next year?
Yeah, so that's the big question mark. I don't think anybody knows at this moment what kind of tariffs President-elect Trump will impose on China. Now it's just a guessing game based on the, there has been some encouraging signs out of Washington, trying to send some positive signal to China. And we are seeing both sides are trying to, at least try to not break the tie. So I think that's our expectation. Likely, we're going to see a lot of volatility. Likely, we're going to see a lot of kind of headline risks, a lot of knee-jerk reaction. But ultimately, for a country like China, right? So this is a massive economy, and it's a lot more domestic-driven than a lot of other economies in the world. So ultimately, what will matter for China is not exports; it's actually domestic demand. If Chinese policymakers can use fiscal easing to support domestic demand, I think the economy will do better. Regardless, obviously, if we have very serious tariffs, then that's bad news on margin. But more importantly, I believe just what Beijing will do in terms of domestic policies.